Good afternoon, everyone. Welcome to the PivotBoss Trading Room, and welcome to the August monthly outlook for August 2019. Thank you all for joining me today. Quite an eventful day today. I believe it was the biggest down day of the year with the most selling pressure here. ES down over 3%, the NQ down over 4%, YM a range of 985 points on the day. That's 3 times the normal range. That's pretty tremendous range right there. We'll talk about the markets here. I'll give you some outlook heading into the rest of the month and into the rest of the year regarding many of these markets. And then I will also provide a ton of candidates here. Scouted hundreds of stocks here, and we're looking for various types of setups as we head into the next over the course of this week and over the course of the month, and also some candidates that may do you well heading into the end of the year. So without further ado, let's go ahead and get started with our August monthly outlook. Now, the first thing I wanted to do was bring up a chart of the S&P 500 futures. So this is the ES. This right here is today's daily bar. That's today's daily bar. A tremendous sell-off today. You'll notice right here, this is the range for the day, 113 points. Over here, it quantifies that against its 10-day average. It's been averaging 43 points on a 10-day basis. Today was 113 points. And over here, you see 333% right there of normal range. So today was 300+% of average range. The other thing you'll notice is if I bring this all the way back out to the beginning of the year, and I can just draw a line right here from this high, this is the day with the most range this year by far. Everything else with high range over the last couple of days was about 70 handles here, 70 handles here, about 60 to 70 handles there. The only other day that has similar range this year is right here, and that one I don't even think broke through 80 points. Maybe it was 80. It was 83 points of range. No, that was 100 points of range right there. So that was a pretty sizable day right there. That was a big up day. But other than that, we've had tremendous low range, low volatility type of trading activity through the first 4 months of the year. Obviously, in May, we had quite a bit of selling pressure, and then June turned right around. July was sideways, and then we began August with quite a bit of selling pressure. Hey, Bullhammer, good to see you. One thing to consider here is how the recent selling pressure mirrors last May. Here was May right here, and if you're in my trading room, you've kind of heard some of this spiel before. But this right here not only mirrors last May, the current selling pressure, but this pattern also mirrors what we saw last September before we saw selling pressure, and we made note of that both times around. Now right here, what happened was we had our May FOMC key level that came out. So you had the Fed FOMC meeting, and then you had the Fed interest rate decision. That was May 1st. Immediate selling pressure occurred, followed by an aggressive bounce to retest the level, and then that was the death knell, and significant selling pressure occurred. Fast forward to this past Wednesday, the FOMC meeting, 2-day meeting finished on Wednesday. They released the Fed interest rate decision. This time it was a cut of 25 basis points for the first time in over a decade, and immediate selling pressure occurred yet again. The very next morning, price aggressively trended higher throughout the morning, and it was an aggressive program-driven trend day and came just shy of retesting that level in the ES. It did get it in the NQ, and then a massive turnaround occurred, and we sold off the rest of the day. That right there mirrored kind of what we saw back here on how this thing has produced quite a bit of selling pressure already. This one was much more aggressive so far than we've seen in May. Now again, if you recall, back over in this area here, we had the FOMC interest rate decision come out, and then on Sunday evening, this is Monday, Sunday evening, that's when Trump began to send his weekly trade war tweets regarding China tariffs, and that pushed stocks down. Sunday evening again before Monday, did it again. Another Sunday evening, did it again, and then it was midweek where he talked about Mexico tariffs, or threatening tariffs on Mexico, and that was 4 weeks to knock this thing down. Perhaps, again, we can only theorize, but perhaps with the goal of getting the Fed to lower interest rates. They didn't lower again in the June meeting, but this time around they did, but they only lowered by a quarter point, right? Perhaps he wanted something more aggressive. Perhaps he wants September, another rate cut in September. And so, again, the very next day after the rally, when price was sitting basically up here above 3,000, another trade war tweet, this time mentioning tariffs on China and perhaps as high as 25% starting next month, and that cascaded lower, triggered a major market sell-off, and here we are. So it's interesting to note that today, after today's selling pressure, the next meeting now, which will be in mid-September, that meeting now has a pretty high probability of getting not only a quarter point cut, but perhaps even a 50 basis point cut. So that's pretty interesting. So again, a lot of similarities here between these two times and how the market dropped after those tweets. So pretty interesting the way that's playing out. The other thing I want to point to is how similar the placement of the range was to last fall before we sold off. So if you look back here, this was the January high right there, and that January high led to a major sell-off. It bounced from the low, and we created this major key range, right? That low to that high. That was our key range that we used. And then price formed a box here throughout September. And if you recall, last September I mentioned that this box right here is very important, because if we can't hold 2880, we likely rotate back to the midpoint of the range, 2700, with a shot to rotate all the way through to the low of 2529. And obviously, once we failed to hold that level, this thing cascaded tremendously lower. So that was something that we talked about last year. Now again, fast forward to this time around, you'll notice again, same type of price action here. You have this high, which is the key range high. You have this low, which is the key range low. And that's our new key range that we've been using to kind of do business off of. Well, we formed another nice little rectangle above this key range high. And so for those of you that have been following my pre-market reports, my pre-market video is free to anyone that wants to watch it every morning. I've been talking about this box throughout the month of July. I kind of feel like a parrot, continuing to talk about the box, continuing to talk about 2960, and how if we broke 2960, we likely have a quick move back to 2880 with a shot to see a quick move back to 2800. And now, after just 3 days of breaking that level, we are almost all the way across the range with a shot to see even more downside price action, perhaps to the June low at the very least. So again, a lot of similarities this time against last time. In May, it was very difficult to foresee this kind of drop because you can never foretell when one of those Trump tweets is going to come out. But this time around, while you cannot foresee when a Trump tweet's coming out regarding tariffs, we did find the box, and we did know that the box was above this previous high, so we knew which key level would be the level to watch for signs of failure. So very, very solid here the way that this is played out. Again, this was tremendous selling pressure. It caught me by surprise as to how bearish today got, because typically speaking, after you see quite a bit of selling pressure in the morning, you tend to find a low, and then you go sideways into the close, and then you probably pick it up and continue downward the next day. That's what happened the last 2 days. We saw selling pressure, and then we saw range-bound action the rest of the day. Today was not like that. Today was a fire sale where they pushed it lower throughout the session, and we ended up hitting the 200-day moving average. 200-day comes in at 28.41.5. We are now below that level. The last time we were below it was after the May sell-off, but it took at least 3 weeks of selling pressure to get to that level. This time it was all of 3-4 days, and we're now below it. Are we going to find a quick bounce back up? You know, that's something we have to work with here, and I'll talk about a strategy here that we'll be looking at some candidates to see if we get a quick snapback. Oh, finding support near the yearly CAM H4 level. Thank you for that. Yeah, that could be a pretty significant level as well. Those yearly pivot levels are very, very powerful. So quite a bit of selling pressure here. If we look at the NQ really quickly, very similar price action as well. This one had more weakness today than the ES did, but again, if you just take a look at the key range high, the key range low, that gives us our impulse move there with very important ranges, and then you can see how price had set up shop above that key range high throughout July. I kept talking about 7,800 and how if it broke 7,800, this thing could be headed much lower. And again, that violation occurred late last week, and today, look at the size of that day. That's 344.75 points of range, the biggest day of the year. Tremendous, tremendous weakness there out of that day. You have to go all the way back to the day after Christmas here to see a range that was bigger. This was 489.5 points, but that was an up day that triggered the recent rally. So again, anytime you have a major significant high like this, where you have a big, big rally and then it finds a strong high and pulls back sharply, you now have yourself a key range here. You have yourself a defined prior high that you can work off of, and now this range right here, a failure to hold that level opens up a move to 75.80 and down to the lower edge of 7,300. So we have 7,300 as the next target below based off the key range, and that's just the short-term, near-term targets. And we talked about these last week. So I probably could have done the August outlook on August 1st. I wanted to wait till Monday here, but again, for those of you in my trading room, my premium trading room there, we know that what we were looking for, and we knew the targets. And I also released some of this information as well in the pre-market videos for those of you that watch those. So tremendous selling pressure out of these. We're now back to the 200 period average. What was interesting about the NQ last week on Thursday was the fact that price rallied all the way Thursday morning and got above the FOMC high here and sat above 8,000 for 30 minutes or so, and then proceeded to sell off from there. So it was a failed high right at that point, the optimal entry point, and this thing crushed to the downside. And we're still seeing weakness after hours right now as this thing continues to go lower. It's down 4.4% now on these lows. So tremendous selling pressure here. Now we have to wonder, how is this thing going to play out tomorrow? How's it going to play out in the days or weeks ahead? So we've talked about kind of the setup and what's happened. We obviously see a big red stripe going down the middle of our screen here. What's going to happen tomorrow? What's going to happen over the course of the month? What's going to happen over the course of, you know, the rest of the quarter? And if we look at the S&P, again, I'll go back to the ES. Those of you that have been around in my room for a while know that every August I usually come in here and say, you know what, the August pullback, we need to watch out for a potential August pullback. August tends to be the most bearish month of the year. October can also be very bearish. At times May can be bearish. But August seems to be a very bearish month for a couple of reasons. Number one, you know, it's the end of the summer there, and before trading picks up, it can have a nice little discount, provide a nice discount to prices, followed by what can be a very aggressive finish to the year. So a Santa Claus rally into the end of the year, perhaps. So what happens here in August, now it doesn't happen every single August, but it tends to happen fairly routinely. Last year it did not. Last year was an up move in August, kind of an up sideways move in September, and then the October hit occurred. So what I usually say is if we have a very bearish August and we find a strong pivot low, that low can oftentimes be the low for the rest of the year. You can use that low as an anchor point and look to buy off of that low for what could become a very solid rally into the end of the year. Now, it depends on the severity of this move as well. This is a pretty solid move so far, and it's not done. If the August sell-off is weak or kind of light and provides a pivot low, then at times the October sell-off can take out that low, and then we proceed into a rally into the end of the year. So again, October depends. It can take out that August low depending on how shallow that low is. In this case, this is a pretty significant low so far, and we haven't even found the bottom yet. So once we do find a bottom here, maybe it comes in like this with a nice tail, that could become the low for the rest of the year. If you go back, you don't have to go back too many years to find that low. Last year was atypical, but that's because they were going to sell it off in Q4, so they rallied it right ahead of time. 2017 was just a straight up year. So that was a little bit different there, but you did see a little bit of a pullback in August, and it kind of pulled back and went sideways, and that did become the low for the rest of the year. 2016 was atypical because that was kind of an atypical run into the 2016 election. So that was a very quiet period, again, not very typical. And then 2015 was more along the lines of what you would normally expect. Here's 2015. So right here you can see that's August, significant selling pressure. Again, that's along the lines of what we're seeing now, right? Pretty significant selling pressure, and then we bounce back. It dips a little bit at the end of September, October, but that becomes the low for the year as it rallies into the end of the year. If you go back a little bit farther in time, this is one right here. Here, let's grab a little bit more time over here real quickly so I can show that, and then I'll move off this topic. So if you go, say, to 10 years out, and we'll go back to about 2014, right here. So this is 2014, and here's August. It dips in August pretty good, but it was pretty shallow, and then it rallies. This is October. It comes out here and takes out that low, and then it rallies into the end of the year. So again, it just depends on the severity of that drop. If it's a shallow pullback in August, October can tend to take it out, and then you get a year-end rally. If it's a heavy August pullback, it can tend to be the low heading into the end of the year. And if they rally it in August, then watch out because Q4 could be bearish, right? Those are some tendencies that are generalities for this time of year. So we've been talking about the potential August pullback all of July to get our traders ready for that potential move. And again, it didn't take long for that to start becoming very true very quickly. So a lot of things came into play. You had your box that formed above the key range high, and you took out 2,900. You had the Trump tweets that came in regarding China tariffs. You had the FOMC lower a quarter point, so then that was kind of like the sell the news, buy the rumor, sell the news. And then you had August seasonality, and it all kind of came together to create this perfect, storm of selling pressure. So now, again, I just wanted to talk about some background there. What's going to happen now? It's always difficult to tell what can happen moving forward, but normally, typically speaking, what I would say is if we've had a significant sell-off or impulse move, I'm looking for some sort of bottom to play the reaction back up back as well. So at some point here, we're going to see some sort of reaction and find a low, and then we are going to snap back and perhaps trade back to the midpoint of this sell-off. If we're just taking the August high to the current August low, this is the current August high, that's the current August low, this is your midpoint, that's 29.17. So we'd at least go back toward that zone. Now obviously this may not be the low. I think what's likely to happen is we will see another sell-off tomorrow morning, perhaps after hours, perhaps pre-market, and this market could be aggressively bearish again tomorrow. It likely dips maybe below 2800 or so, and then maybe it forms a reaction, a rejection tail, and from there we can now use that low to start working our way back up to the mid. That's going to be a very good quick reactionary move, and is very similar to what we saw last time around as well. We had the major sell-off that occurred to finish May, and I mentioned watch this low, because if we drop down below it on the first trading day of June and then start to reject that low, we'll likely bounce back over the course of June and bounce back to this pink line. That pink line is the midpoint of the May range. So that's the May high, that's the May low, and if you reject it, you probably come back to that pink line. It did that and then some. So this is the trade. That's the trade coming up. But we need to withstand tomorrow's selling pressure that can continue to happen. Anytime you close near these lows, so the close and the low are very close to each other, there's a tendency to drop below those levels and then reject them. And as soon as it's able to reclaim prices above that previous close, you're likely going to see an aggressive bounce of some form. So again, we may see more selling pressure into 2800, perhaps a little bit below, but by the end of the day, where are we? Because if we're back up to this point and we throw off a rejection tail, I think we have maybe a good week of strength that could look something like this. And it could bring us back toward 2900. And then that bounce may be an opportunity for bears to defend ahead of the next wave down. This sell-off may not be done. It may not be just 4 days and over. It could have another wave or 2 or 3. Just like last time up here, that's September, here's October, it gave it out. It bounced pretty quickly, then it sold off. Then it bounced again and sold off. Then it bounced again and sold off tremendously. Even over here, we got the first wave down. It bounced pretty nicely, and then it sold off again. There's going to be another wave in most cases. So again, even if we were to bounce higher, if we can't get back above, say, 2950, that could become an area where bears defend up here and look to push this thing down even farther, perhaps 2700 or lower. Now, I do want to talk about a longer term pattern. This is a longer term pattern that has developed on a weekly time frame chart, and we've been talking about this pattern for a long while in the room. It's also kind of what helped us define what could happen last fall. But last fall, we were forming that range up here above this key range high, and I mentioned it could likely take us to that low and through it, and it did. And then it comes back up and takes out the high and forms another range up here and drops. So we're having the development of a very large expanding range, right? Or a megaphone pattern, if you will, that large expanding range. So if we're just now coming down off the top of that range, are we about to see something down here? Are we about to see this thing drop into 2200 and then see maybe a bounce all the way back up? I mean, it wouldn't put it past the market to do that. I mean, this market could certainly see that type of selling pressure ahead. And so once you see this pattern, it's very difficult to unsee it. It is a very ominous, very bearish pattern, and it has not failed us yet. The other reason why I like it is because this pattern has formed after a very bullish few years. If you get a market that sees very clear markup phases and very strong bullish markup phases, and then you start to form this pattern at highs, I mean, Again, this is digestion of the recent move, and you tend to take out highs and then drop it. You take out lows and then rally it. You take out highs and then drop it. You take out lows and then rally it. So it wouldn't surprise me if we drop toward 2200 at some point here down the road to take out that recent low, come into the LVN, keep that megaphone pattern in check, and then see this thing rally. Even though YM has a pattern in the weekly time frame that looks very, very similar. So again, look at all the uptrending behavior. You see this thing? This market has been trending up for years, and now when you have this kind of rally, you tend to see this type of pattern form at highs. I mean, look at this thing. That is tremendous, and it's tremendously bearish. So again, even if we were to bounce, if we can't start getting back above 27K or 26.5, then perhaps we start to see some sort of drop toward the lower line here. We could be headed back toward 20K ahead. So I mean, this could be very bearish over here over the kind of medium term. But then once you do see a sell-off of that magnitude, it could be a tremendous buying opportunity right back up the way. So this is going to be very interesting to see how we continue to play out heading into the end of the year. I would say in the near term, there's some really good bounce potential that can be seen. The NQ as well. So here's the NQ. Let's go back to the daily time frame here. We've hit the 200-day average across the board. And that's always a good spot to watch, again, for reactions and a bounce. So again, tomorrow we have to see how much selling pressure do we get at the open. That's going to be the best case scenario. If we rally right at the open, I mean, that's fine. But normally, in order to incite even more buying, you want to drop it first, make it even cheaper, and then start to see the rejection occur. Once this thing starts to get back above 7,400, it could be an easy bounce back towards 7,700. So it could be a pretty good 300 handle rally, reactionary rally from current levels, and even more from any potential lower levels. Say we hit 7,300. Again, let's look at this key range high, and here's the key range low. Built a range up here and broke it, so you come back to the midpoint, and then you come back to the low. So we still have to hit that low, which is 72.90. So we might still have 72.90 ahead for the market tomorrow. And then if there's a significant recovery, it could be a great near-term bounce opportunity over the next 1 to 5 days or more. So those some thoughts there. Now, I know I've been beating this over the head here, this analysis on these indexes, but I also wanted to bring up what it looks like in Visual Trader here with my PivotBoss bands here on the composite basis. For those of you newer to this form of analysis, this is basically composite VPOC, or sorry, composite VWAP rather, so composite volume weighted average price. And this one is a year in the making, right? So it's over a year now. So it started last July, and now we're into August. And you can see how VWAP is a very important level to this market over and over again. And then with this being composite VWAP, you have standard deviations down below, and then you have standard deviations up above. So this is your first standard deviation below, second standard, and third standard deviation below value. And this is 1, 2, and 3 standard deviations above value. So one thing we talked about in our trading room last week is the fact that price is now above, or had been above, R3. It is above the third standard deviation. Whenever you are outside the third standard deviation and you have a flat VWAP, it's usually overextended. It's overvalued. It's 3 standard deviations overvalued or more, and that usually leads to a rotation back to value. So in this case, we still need to get to 2790. 2790 basically is composite VWAP for a retest. So this one still says that we have a little bit more to go. Right? You get up here and you form a range above R3. That is what I call the max reversal trade, and it usually leads price right back to value and can tend to push price across the value range into S3. And then down here it may form a range and start to bounce back up, right? So not only could we hit the midpoint or VWAP, but we may even go even lower down the range. So that's the ES there. If we look at the NQ, very similar. This is twice now that we've hit R3. Last time we hit R3 was right here in April, May. We talked about it then as a potential fade opportunity back to value, and it did it. This time around we talked about it again as being a box above R3 here, and a failure there can lead you right back to value, and perhaps again all the way across the range, which would take you to 6,600 or so. So again, that level is going to be about 7,200 on this chart. Let me see here. It's at 72.10. So we could be looking at more weakness to about 72.10 before we bounce at the very least. So again, quite a bit of weakness here, and these composite volume weighted average price bands can be incredible for longer term moves. So again, various ways to identify the move ahead of when it happened, but pretty solid stuff. All right, so I wanted to now talk about gold futures here, because gold has been going the other way. While these markets are dropping, gold is going straight up. We talked about gold before, and the last time we had it as a buy candidate was right here. It had formed right on 1270, 1280 support. That outside day was a big up day, and we mentioned, okay, we could be changing to the upside now and rallying to 1360 to 1375. We got there, but again, I kept mentioning that 1375, we hadn't gotten above that level in over 5 years, so I wasn't expecting it. But I said if we got above 1375, we'll start to work toward the 1525 target. So again, let's bring up the weekly chart to kind of look at this right here, because this is significant. If you look back here, it's been a very long time since we've traded 1525. You'll probably remember when gold rallied here from $1,000 and went all the way to $1,900. That was tremendous. And then it formed support here at 1525 and kept bouncing. Meanwhile, up here at 1800, it kept dropping until right there where it sold off. And we dropped all the way down till we got to about 1050. And then that was the low there. Here recently, last August, we also had a low right here, and we called that low in the trading room and mentioned we likely rallied to the pink line by the end of the year, so that was a good call, with a shot to go up to 1375 by Q1 or Q2. So we got that continuation, but again, going to 1375, we have not seen any attempt to break above that line in a very long time. So to get above that 1375 CLVN is very important. And when I mentioned that, now that we're through it, 1525 is your next target. And 1525 is prior support that goes all the way back to 2011, 2012, 2013, where it was support before it finally fell. Now, one thing about this one is also the large rounded bottom that is developed. Huge saucer-like pattern, right? That rounded bottom is massive. And breaking through 1375 suggests that not only could we rally to 1525, but we could go all the way up here to 1800, or perhaps even take out that 1900 high. There's enough energy here, 5.5, 6 years of energy to trigger a massive continuation to the upside over the next 1 to 2 years. Again, this has been a tremendous bull market here since last August, and is now broken to levels that we have not seen in 6 years. I still mention to our team that 1375 is still the major level. If we were to pull back to 1375, it could still be a buying opportunity for a continuation higher. I still believe 1525 will be hit, but after it's hit, perhaps we form a range in this zone between 1375 and 1525 as it renews and rebuilds energy. And then perhaps we see a continuation above 1525 at some point. So that's kind of the flow that I see here on the longer term basis for gold. The idea is that as long as we stay above 1375, we have a great shot to hit 1525 and maybe even get up here to 1800, which are probably previous highs. So that could be significant. So that's the long-term outlook in gold here. If we look at just kind of the near term, I mentioned after the June rally that we were likely going to see compression in July, but that could fuel an August rally as well. We have kind of an ascending pattern that developed here. First trading day of August, we got a bullish outside day, and that was, basically the catalyst here to get this thing going. Today, a big up day, up 1.25%, hit 1480 for the first time in 6+ years, and again, as long as price remains above 1440 here on a near-term basis, we likely continue toward 1500 and 1525 in very short order, probably by the end of the month. So gold remains bullish. Anything gold related, whether you're looking at KL or AU or GLD or GDX or any number of gold stocks, that's likely a great way to go right now while this market is finding weakness. As a matter of fact, in our last monthly market outlook, I had AU as our long candidate, or a long candidate for us off of this pullback low. That's when I bought the 16 in the money calls, and I eventually took some off all the way up as we went and took off the last bit on this day here. And again, that was just a great trending market. Now we've seen support come into play at 17 bucks, and this thing is just rallying to high. So again, any pullback is a great buying opportunity in these gold stocks. KL was another one here as well. This one was on our buy list as well. You can see again the pullbacks and the rejections here in the uptrend, and that led to a nice bout of strength. This LVN's coming into play here off the $40 level, and recently hit it on August 1st and rallied tremendously up to 48. So that's pretty significant. So again, this market remains very, very bullish. All right, let's take a look at some stocks here. Now again, keep in mind, if we do find a rejection from these lows pretty soon, maybe tomorrow, could be a turnaround Tuesday, right? We could see a nice rally over the course of the next week or so, back toward the midpoint of the range. So keep that in mind as we look at some of these stocks. Here's APO. There's APO right there, and you can see again major selling pressure. It's an impulse sell-off. An impulse sell-off is when price rallies and finds a high. It's the highest high, and then it immediately turns around and sells off tremendously until it finds a strong low. And if it finds that strong low, there's a tendency to bounce back toward the midpoint of that range. The midpoint of that range. The high here is 36.5, the low is 30. So the midpoint is going to be about 33.25, which is about right here. So that's going to be the target. So the target for this one's 33.25. That would take you right back to the previous month's close. Again, anytime you have an aggressive sell-off, there tends to be some sort of reactionary rally that follows. So this one is going to be one to keep in mind. Now, for this play to continue to be bullish, ideally you want price to close and remain above the midpoint of the final rejection bar. The midpoint here is 30.84. That doesn't mean that price can't come back to it or even kind of trade below it for a little while. You just want bulls to be able to defend that level and keep prices above there. So if this price can stay above 30.8, it has a great shot to rally back toward 33.25. The other thing about this one is it's below 200, the 200-day moving average for the first time in a while. The last time it got below it here, it spent 2 days and then rallied to new highs. Again, not saying that this will rally to new highs. That's not the goal. The goal is just to get this back to the midpoint of the sell-off, and that is usually a high probability trade that can happen within 1 to 5 days. So this is going to be one to watch here on the long side. We also have CG. Looks very similar as well. This one's taken some selling pressure over the last few days as well, like the broader market. This one's had an overall bullish uptrending market. You can see here this is the last trading day of July, followed by significant selling pressure here in the first few days of August. Big rejection day today. It took out last month's low, which is this blue line, and closed back above it. So again, we could be looking at a bounce back toward the midpoint of this range, which would take you about $24. We're trading $22.50 right now, but any pullback into as low as 22 could be an entry for a move from 22 to 24. So that's going to be one to keep an eye on for a snapback reaction type of play. Again, you want price to stay above 22s. It can come down there and test 22 tomorrow or 22.10, but you want to see bulls defend that. If it fails to hold 22 on a closing basis, then the trade is over. If it opens tomorrow, say it opens with a gap down and it opens at 22, the trade is off as well, because it's likely going to find new lows and keep on searching lower. So that midpoint is going to be very, very important. Another one that looks very similar is Dell. This is Dell Technologies, basically Dell Computer. Reestablished its stock here last December, and this is the lowest price we've seen in a while. You can see here there's a nice little LVN that comes into play right in this zone. Price dropped over the first few days of the month, and you have that high down to this current low. Your midpoint's going to be 53.72. We're currently trading 50.40. You can pull back even a little bit more to about 49.68, and it could be a decent little bounce back candidate as well, one that could even get you back up to the recent high. So this is going to be one to keep an eye on. Again, I like when a candidate takes out recent lows, multi-month lows, previous month's low, and it drops into an LVN and finds rejection as we did today, because that can tend to be a very bullish stock on a near-term basis. So this one could be rallying back toward 53 to 54 as long as it can continue to hold above 50. Another one here to keep an eye on is DKS. That's Dick's Sporting Goods. Again, very similar theme of these first few candidates, an aggressive sell-off. Boom, boom. Followed by a very bullish rejection tail today. That rejection candle also forming at previous lows. So it took out those recent lows over here and then rejected prices below there. So this one again could be bouncing right back up, could be headed back toward 35 to 36. Another thing that I like to use to help me judge how far price can go is my PivotBoss ADR targets tool. It's basically these three lines right here. It's this green dotted line followed by these two green solid lines. All it's doing is it's finding the current low, and then it's forecasting higher average monthly range. That's average monthly range over the last 10 months. And this is 75% of average range over the last 10 months. So somewhere in that zone could be the target based off of average monthly range over the last 10 months. And so it gives you high quality targets. And that is a zone that could easily be hit. But again, all we're looking for is the midpoint from here to here. The high here looks like it's, say, call it 39.5. This is 32. So that's, call it 4 or 5 points. So yeah, it looks like it has a good shot to get somewhere between 35 and 36 as your target. On a midpoint basis, you're looking at an entry somewhere around 33 to 32.80. So if price were to pull back to 32 to 32.80 and hold that zone, that could be an entry for a continuation higher. Again, if price were to open below 32.80 or open at it, it's likely going to flush through that low. So you always want price to open above that level and then rotate into it and then see a defense for a continuation. If it opens at it or below it, the deal is off. It's likely going to continue lower. Let's look at, what is this one, PDD. And these are all long candidates right now, despite the weak market. There's plenty of sell candidates as well, just starting on the long side right now. Now this is one that's interesting to me. This is PDD. Not sure, it looks like an ADR of some sort, Pinduoduo. This is the type of look and feel that a chart can have just before it explodes through the 200-day moving average. So this cyan line is the 200-day moving average. We saw a failed attempt to get a new low here. So we got a strong low. It pulled back in a downtrend and then went to try and get a new low but failed. So there was a higher low, and so then it rallied tremendously to the 200 and through it. Now you have a higher value relationship month over month. So this is your pivot range for August, pivot range for this is the pivot range for July, pivot range for August. It's higher. Whenever it's higher, that suggests strength. So you want price to close above that higher relationship, and then you want it to open the month above it, and it did. And then what you're seeing now is price pull back into the pivot range and find support. You're seeing a signal form, and that can be an opportunity for this thing to push through that level. So this is a good one right here to keep in mind. Again, any pullback to say 21.80 to 22 could be an opportunity to rally this thing as high as 25 bucks. So it could be a really good way to go. And if you want a template for this one, E-Trade is a good template for it. And again, this one's cratered here recently. But this is one of those ones that did something similar here, where it was right there and it looked like it was about to rally into the $50 target. And all we're looking for is this thing to explode through 200, right? And then that gives you a good way. Obviously, this one's cratered here recently. Another one is JBHT. This one happened recently as well. So you see here where it couldn't get a new low, so then it makes its move to the 200. Here's a rejection low, and then it explodes over the next 1 to 5 days to reach those upper targets. Now it's back below. One that I traded last week was ATVI. Very similar as well, where let's see, let's zoom in on this one a little bit more. There you go. So this one here again failed to get those lows and looked like it was coming back to the 200. It gave us a signal there on a failed low, and then it rallied to 200 and then pushed through it before failing again today. Luckily, I took off half the trade here and half the trade on this day, so I was out of the last half on Friday before it cratered. Now, speaking of ATVI, this one is a long-term pattern. This is a long-term bullish pattern for those of you that want to trade something, say, I think that by the end of the year, this one could be looking really good, and perhaps into the Q1 of next year, this one could be looking really, really solid. The reason I like this one is you have a huge rounded bottom right there. Huge rounded bottom. You have the rim of the pattern is right here at 52. That is what 9 months of energy building phase for this one. 9 months. You have the first 7 months of this year plus that, so that's 8 months plus starting. So it's starting 9 months. So full 8 months of digestive behavior, accumulation type of behavior. It's now since pulled back tremendously into 46. And this one, again, bounced off the 200 here. If it can find a way through 52, this thing has a shot to not only fill the gap back towards 63, but work its way all the way back to the recent pivot high of 84. That is tremendous. That would be almost a double from current prices. 92 would be a double from this current price. But again, this has a huge, huge rounded bottom. It's been in accumulation phase for 8 months, and this is after, you know, a huge, tremendous up move here. So think of it like this. It's almost like this right here, right? You had the nice, strong trend, and then it pulled back, saw a bit of a rounded bottom, had a bullish earnings here that took it up, and then it took off. This is the same type of look and feel. You have earnings coming up soon. If it knocks the cover off the ball through 52s, not only could we fill the gap, but we could come up here to the recent high and then perhaps even through that high. Again, this is one that would take 6 to 9 months to realize its potential, but it needs to get through 52s. And as I usually mention in our trading room, one of the hardest things to do is predict when a breakout's going to occur. Because I thought that this was a great rounded bottom back here with a shot to finally go, and then instead it went sideways another 3 months. So it could keep on going sideways for another month or two. But with earnings coming up, there's a shot where it can open up above 52, and if it does, it could be full-on rally mode for this one. So I really like this one as a long-term position candidate. 6 to 9 months out, if it can get through 52s, it has big upside potential due to the accumulation phase that it's currently developing. Let's see. Let's take a look at ATH. Here's another one. This one is a pretty cool candidate because it just took out recent lows. I believe this is the lowest it's ever been. Yeah, the IPO was back here back in 2016. So this is the lowest price it's ever printed today. It did so by pushing through the December low. And look at the size of that rejection tail that's developed. That's pretty tremendous. Now, if I bring up my PivotBoss oscillator, where are we? Here it is. And we do this on a weekly time frame. One thing you'll notice is that we have a lower low on price, but the oscillator is showing a higher low right now. That is a bullish divergence. And if this bullish divergence remains intact, most times you rally back to the prior pivot high, which would take you to 46. So if this thing can continue to hold above 38 bucks here, if it can continue to hold that $38 level, or at least that prior pivot low here, which is about 37, so 37, 38, there's a shot that this thing can rally back toward 46. Again, give it 3 months, 3 to 6 months, and this thing could be bouncing right back up. So this is a short-term bounce candidate with long-term potential. So not only could it bounce, back toward 42 bucks or back to the 200-day moving average, but over time it may even get back to the next CLVN above at 46. But you'd like to see this thing continue to hold above 38, or especially the 37.5 zone, wherever that pivot low is here, 37.25. So that's one to keep in mind as well. Another one here. Here, let's bring up VT for this one. By the way, here's ATVI. No, let's cancel that. ATVI. And the higher time frame here. You can see again VWAP coming down. It's below S3. It's been below S3. It has a good shot to really get going. So speaking of candidates below S3, here is Caterpillar. Caterpillar is below S3 on the composite bands, and again, anytime you get that low, you are likely significantly undervalued. The last time we were below S3 was back in May, and then it proceeded to bounce to the second standard deviation of value and got value. Over here we got close to S3, again back to value, and eventually almost to R3. Here we are again. Now it's not going to be a 1 day and then a turnaround. It could trade down here for a week or so. It could build out before it starts to run. But right now we are clearly below S3. We traded an entire day below it. And again, when you're multiple standard deviations below value, that's usually when you want to consider buying something. Caterpillar has had a tough time here recently. It's been mostly channeling down, but it has had the tendency to bounce 20 handles or so when it gets going. And so if this thing can bounce again, we might be looking at 140. Right now it's sitting on support at 120, and it's below S3. So again, if it can start getting above 122, 123 half, it can start opening up some upside ahead. So we'll see how that one continues to play out. There may still be a little bit more downside. There may still be more time trading below the S3. Maybe another week. Over here was a week and a half or more before it finally bounced. But whenever it can reclaim prices above S3, that's usually about the time when you start to see price rally back toward VWAP. So that's going to be one to watch on a longer term basis. DPZ, this is Domino's Pizza. This one is also below S3. The last few times it got below S3, it's bounced all the way across the range, and it did so rather expeditiously, if I can speak correctly. This was a nice rally. That was a nice rally. This one here fell just shy, but now you have kind of a lower low failure. So this is going to be interesting. Can Domino's hold this support level? Right? If it can hold that support, there's a good shot, again, that it can come up here and hit that R3 somewhere between 280 and 290 down the road. In most cases, when you're looking to play this type of candidate, you're looking to bring it back to value. That's your high quality target. That's your quick target that you want to reach. You buy below value, you return it to value, and then you hang on to some of that position, a quarter, a third, half, however you want to scale. You hold on to a portion of that position and look to return it back to the highest levels. So right now may not be the best time to buy right away, but it could be, one of those that's kind of building that energy right now and looking to make that move fairly soon as the coast is clear. So this is another one to watch on a longer term basis using the bands. Okay, I wanted to talk some sell candidates now. After all, the market is dropping. Mondelez was a buy candidate for us back in June. Right here, it was a buy candidate for us, and it rallied very nicely. Went sideways throughout July, a little bit of a rounded top pattern. Then we got our sell here, turned into a sell candidate a few days ago. So you can see this rounded top, you see this very clear rim of the pattern, and it's sold off tremendously today, down 2+%, but it may not be done. I would say if this thing were to bounce anywhere back into 53.5 to 54, it could be a lower high that leads price back toward 48 to 49. There could be a very clear target in this zone ahead. This one has been a tremendous uptrending market for a while. And again, whenever you have that type of market, whenever it's at the end of the road and it's time to change course, it can tend to sell back off fairly quickly. This one has what I call a higher value with a change of bias setup, and that's when you have a higher value relationship here. So this pivot range for this month is higher than last month's pivot range. But look at where the close was for the month. The close for the month is below that higher value relationship, and that is what I call a change of bias. It is, despite the fact that this is higher, which is supposed to denote strength, right? Higher, so ideally you buy it. This one's higher, so ideally you buy it. This one's higher, ideally you buy it. Higher, you buy it. Higher, right? It's higher, higher. This one's higher, but price closed below it, and that's an indication that this thing's about to change direction and go back down. So again, very bearish setup right here for this one. Already started today very weak and could be headed much lower ahead. Another one is BSX. This one has a similar pattern here in that it has, let's grab this here. You can see this one has a higher value relationship there, and price closed just below it, and you can see how weak it's been already. This also has kind of a rounded top type of pattern to it, but whenever this thing fails here, or should it get a lower high or a pullback, we could be looking at a move back toward the 200 as well. So that could be dropping back toward 200 rather quickly. And anytime this one does see a range form at highs, there can tend to be some sort of pullback, pretty significant pullback. So it wouldn't surprise me again if it failed to get back above, say, 42s or establish acceptance above 42s. It could see a quick move back toward 38. EXAS is another one here. What I like about this one is an inside value relationship. This range is inside the previous month's range. That's inside value, and that tends to suggest expansion ahead, or at least increase of volatility. Not every time, but it can. And we're already seeing weakness to the downside. We're holding right at about 109 after developing this kind of rounded pattern. If we fail to get back above 110 or really establish above 112 or so, it's going to be an easy move back to 90 bucks. 90 to 93 could be an easy target zone. And just on a short-term basis, you have the previous month's low right here. Here's the previous month's high, previous month's close, and that's the previous month's midpoint. If you cannot hold above the mid, there's nothing else left to test except for that previous low. So at the very least, we could be looking at a move back to 101.40 with a likely continuation across the range into 90 to 93. quite a bit of candidates here as we continue to go through. This is IR, another inside value relationship, another kind of rounded top pattern, and another aggressive bearish start to the month. This one, if again, we may see a little bit of a bounce occur. We're sitting on support here. We're sitting in an LVN. We may see a bit of a bounce, but if that bounce is followed by another lower high, that could be the ideal opportunity to sell this thing for a sizable pullback of some degree, either back toward 112, which is VPOC, maybe to the lower, the 200-day, or perhaps to the lower LVN of 108. That could only be the beginning as well. This thing could even drop more than that. So I would say if this thing bounces, watch for signs of weakness, as it could be a continuation candidate to the downside. Another one here is Lockheed Martin, LMT. Again, keep an eye on this pattern right here. Whenever you have this uptrending market right here, uptrending, 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 and then all of a sudden at these highs you have this little thin pivot range. It's all one line basically. That is a suggestion that this thing is likely done going up and is likely about to see some sort of weakness. If we do see weakness from current levels, it's likely back to the 330 key level or perhaps the 327 CLVN just below it. And right now we're trading 358, so that would be quite a tumble from current prices. 329.5 would also be the 200-day moving average. So again, that could be pretty significant right there, just to get back to the moving average here. So this one's one to keep an eye on for additional selling pressure ahead as well. APD is a good one. This one, yeah, this one's okay. Again, another higher value relationship, and is breaking down after a significant uptrend. This one has been very bullish, but again, if there's a failure to get back above 225, maybe on this next bounce it starts to form a lower high there, we could be looking at a move back to the origination point of this rally here, which would take you to about 204 with a shot to see 195 as the 200-day. We have not tested the 200-day since January. So again, if we're going to see selling pressure in the broader market, perhaps it returns back toward the 200, which would be 195. WM, Waste Management, has been very bullish, but again, coming to the end of its line, perhaps in the uptrend. Again, all of these have sold off on the first leg, so I would say any pullback would be the opportunity to get in on this for perhaps a move back toward the 200. This one tested the 200 just twice in the first 2 trading days of the year and has been straight up ever since. Again, if this one sees some selling pressure, maybe 104s might be the next target ahead. And let's take a look at Tyson. This one is the last one here of the candidates, but you'll notice here Tyson Food was up today on earnings, up 5% when the broader market was selling off tremendously, but it gave back quite a bit of its early rally. It had rallied a ton in the first 2 to 3 hours of the day and then gave it all back by the end of the day. It's also back below the 84 level here. You have the bottom of market structure at about 75. So this one, I would say keep an eye on the midpoint tomorrow at about 85 bucks. If it comes up to 85 and can't get above it, that might be the best opportunity to sell it for a move back towards 75, maybe even as low as 72. That's your 200-day, and that is where the next LVN below is. This one is a really good sell candidate. Again, if this were to open above 85s or close above 85s tomorrow, the deal is off. Ideally, what you want to see is price rotate back up toward 85, find resistance, and then that's an optimal selling opportunity for a return back down the way. So that's going to do it right there for the candidates for today. We talked a lot about these markets and what could happen here moving forward. Obviously, the ES, the NQ, the YM, and those markets have taken it on the chin today and over the last week of trading, but it may not be done. But one thing we want to watch out for tomorrow is if any selling pressure occurs early in the day, watch for signs of rejection, as it could lead to a nice reactionary bounce. We may not be done selling off on the whole, but we could see some sort of reactionary bounce that leads us back up toward 2900 in the ES, perhaps even a little bit higher. Any bounce that fails to get back above the 2960, though, could be an opportunity to sell it as a bear for a continuation lower. All right, everyone, thank you for joining me for the August monthly outlook. I enjoyed it this afternoon. Have a fantastic rest of your day. I'll be getting the recording out as soon as I can for those of you who want to rewatch the session. Have a great night, and I'll see you soon. Take care.